but there is a finite amount of gold. That's it. It can be above ground, it can be below ground, and gold is indestructible. So you want to make it easy? You take all the debt that exists, use that as a proxy for all the money that exists, and divide it by all the gold that exists, and it's somewhere north of $40,000 an ounce. We don't own that. According to the Bank for International Settlements, these are their words, not mine, gold is the only financial asset that runs zero counterparty risk. You hold it, you own it.
Gold surpassed $2,500 an ounce for the first time, fueled by growing anticipation that the U.S. Federal Reserve may soon cut interest rates. Spot gold surged by as much as 2.2% on Friday, surpassing the previous record set last month, after a weak U.S. housing market report intensified expectations of swift and substantial rate cuts by the Fed. Lower interest rates tend to benefit gold, as the metal itself does not yield interest. This year, gold has risen over 20%, driven by increasing optimism around monetary easing and significant purchases by central banks. Lynette Zang, founder and CEO of Zang Enterprises, shared her insights on gold and silver prices in 2024, highlighting the increasing global shift toward precious metals as a means of protecting wealth. According to Zang, while gold has already reached record levels this year, driven mainly by technical factors, its true fundamental value is much higher. Despite the stock market valuing gold at around $2,500 an ounce, she believes this figure significantly underestimates its worth. Zang envisions a scenario where gold could potentially rise to $40,000 an ounce, reflecting its true value in a world awash with fiat currency. The decline of the US dollar, USD, as the world's reserve currency has been a widely discussed issue for years, particularly after the global financial crisis, GFC, of 2007 and 2008. In 2024, the Atlantic Council's Dollar Dominance Monitor reported that the USD's share in global reserves had fallen to 58%, down from 72% in 2002, a 14% decrease over 2 decades. Lynette Zang highlights the real impact of this decline by pointing to the diminishing purchasing power of the Federal Reserve note. She emphasizes that this is not just her opinion, but a fact stated by the Federal Reserve itself, when you acknowledge that the purchasing power of the dollar is essentially zero, in reality, worthless. We've gathered some great clips to share with you. Before diving into more content, consider subscribing and enabling notifications so you never miss our latest uploads.
If you want to know the true value of an ounce of gold or an ounce of silver, let's make it real simple, because here's a guarantee. And I can't tell you when, but I'll give you this guarantee. At some point, all assets, all instruments end up at their fundamental value. So if you look and you see that it's zero on the purchasing power from the Federal Reserve, not my opinion, from the Federal Reserve, then you know that the true value of this $20 bill is a big fat bupkis. It's zero. So it doesn't matter how high the stock market goes. I happen to have a $10 trillion Zimbabwe note here amongst all these currencies. This happens to be 500 million bolivars, right? And here's a million bolivars. What can I buy with that? Absolutely nothing. And yet in 2012, 13, 14, maybe even 15 and 16, in Venezuela, they had the best performing stock market in the world, but they were also in hyperinflation. So all that stock market does, it has turned everybody into traders. It has turned every single physical asset into a trading instrument for the banks to make money on, for goodness sakes. What's the fundamental value of an ounce of gold? The stock market says, to your point, 2,500, a little bit below that, all-time highs. Is that true? Is that all that that's worth? No, it is not. So you want to know how much that's worth? You take all the debt that's been used to create not just dollars, but all of the fiat money all around the world, take your pick, and you divide it, because there's an infinite amount. They can keep doing this as much as they want, right? I wish they would run out of money. But there is a finite amount of gold. That's it. It can be above ground, it can be below ground, and gold is indestructible. So you want to make it easy? You take all the debt that exists, use that as a proxy for all the money that exists, and divide it by all the gold that exists, and it's somewhere north of $40,000 an ounce.
40,000.
Oh, yeah. Oh, yeah. And I know that sounds outrageous, and people are going to go, oh, what is she talking about? It's only $2,500 an ounce. Well, go back to 1900. What is the face value of this coin that was minted in, this happens to be 1908? $20. So if you had gone back in 1908 and said to a citizen, you know, one of these days, the more of this that they do, the higher that number goes, right? I'll tell you what it's going to go there. If you're counting on Wall Street to tell you the true value, again, I have that bridge in Brooklyn. You're never going to get that because that's not the market function. It's going to happen when all confidence, this is a con game, requires confidence, when all confidence is gone in the monetary system and in those leaders in the central banks and the governments, then to get the then we will enter hyperinflation. And there's unfortunately not one doubt in my mind that we're headed to a hyperinflationary depression. And I also believe, for technical reasons, which you can ask me about, we can get into if you want to, we're already in the early stages of that, of that hyperinflationary depression. That is when, in order to regain your confidence, that they will do those overnight revaluations, right? And that's when you'll start to see gold begin to express.
As digital transformation continues to reshape the financial landscape, central bank digital currencies, CBDCs, are emerging as a significant development. CBDCs offer the same functions as traditional currency, but in a digital format, enabling payments, savings, and investments with benefits such as reduced physical cash handling and enhanced transaction traceability. However, India's central bank has expressed concerns about the potential risks posed by CBDCs, especially during financial crises, as highlighted in a report from Business Standard. According to Lynette Zang, CBDCs will inevitably be pushed on the public, and the key question is whether we will accept them. She emphasizes the importance of securing essential resources like food, water, energy, barterability, for her, silver, wealth preservation, for her, gold, and shelter. In her view, having these fundamentals in place is crucial to maintaining a reasonable standard of living in a world where CBDCs may become a dominant force. Now let's turn our attention back to the video.
They need, having studied currencies and currency life cycles, having looked at over 4,800 examples and seeing what happens 100% of the time in every single financial shift, and we're doing the same things, they want you to think this time is going to be different because then you don't make choices that support your best interest. But it's never different. So yes, they need a big enough crisis to shove the CBDCs down our throat. And I'm working diligently. This is why community is so important. I'm looking at community on two different levels. Locally, because I think your viewers can remember 2020 when you couldn't get toilet paper or food at the grocery stores or any of that. That was a warning. Those supply chains have not been fixed. And if you move one jar up on the top shelf, you'll see there's nothing behind there. So the mantra developed because of that. But that was a huge test to see how much they could control the population. And then the population thinks that's over. It's not over. They learned a lot from that, and they need a big enough crisis to shove this stuff down our throat and say, save me. Where I'm saying when we're looking at community on a local basis, if you can create community in your neighborhood, at your farmer's market, with your local food growers, purveyors, that you can secure your food, water, energy, security, barterability, which for me is silver, wealth preservation, which is for me is gold, community, which is critical, and shelter, because these are the things we need to have a reasonable standard of living. And so that's why I'm doing this. That's why I do all of this and go out and meet the public and try and spread the word, because things will get very local. When things get very scary, they get very local. You have to be prepared for that. But globally, because they are going to shove these CBDCs down our throats, the question is, will we accept it? If you don't have a sound money portfolio, a foundation of real money that is outside of their system, you have to do whatever they say. They say jump, you say how high. They don't like your opinions, they cut you off. We saw that in Canada with the trucker strike, right? And we're thinking that's a free country. No. So if we come together in community and can make security there, and we come together globally and create a quiet revolution just by converting this garbage, into sound money, well, guess what? Maybe make a difference and have a foundation of sound money in the new currency. And I'm not saying 100% backed, but something that's going to create restrictions around the abuse that politicians and central banks heap upon us. Because frankly, it's not okay with me. So that's the battle, and that's why I am all about community, locally, globally.
Gold has surged nearly 24% year-to-date and approximately 30% over the past 12 months. Often seen as a safe haven asset, gold serves as a hedge against inflation and market volatility, particularly when the purchasing power of the dollar declines. In recent years, the pace of de-dollarization has accelerated, with one notable factor driving this trend being the expansion of BRICS nations, which are increasingly challenging the dominance of the US dollar in global trade and finance. With gold prices increasing, do you think now is a good time to invest in precious metals, or is the market becoming too overheated? We'd love to hear from you. Share your thoughts in the comments, give us a thumbs up if you enjoyed the content, and subscribe to stay connected with our ongoing exploration.